Hey, this is Sharon Vornholt with the Louisville Gals Real Estate blog. I'm here today with another episode of Let's Talk Real Estate Investing. And my guest is Kira Golden. And I'm so excited to talk to her because she does her business in two very different locations. She's obviously mastered the art of working remotely, which is something I'm interested to talk to her about. And Kira is the CEO of Direct Source Wealth, a company that helps investors with passive income, which is always a great big topic for people. They always, want to know, how do we do that? So she has an impressive background both in multifamilies, vacation rentals, and there's really just so much for her to tell. I'm going to let her tell it. So welcome to the show, Kira.
Well, thank you. I'm very excited to be here. Thanks for having me.
So why don't we start out and have you tell everyone a little bit about what you do, and I want to talk about your location too, because I'm fascinated by the fact that you can move back and forth between such very different places.
Yeah, no problem. It's funny. So, my primary vehicle is real estate, but I would actually say what we do is about trying to bring a little bit of a soapbox here, but what the world calls alternative assets. I would argue real estate's been probably the primary wealth growing vehicle since, title ownership existed in feudal Europe, but regardless, it's considered an alternative asset. Other types of alternative assets to investors in a platform that gives them the same ease and experience of going through sort of the stock, bond, and mutual fund world, but gives them direct access to deals and better opportunities to be making money. And as you mentioned, I do that primarily from Puerto Rico. That's my home base. But I do spend the summers in Colorado, and I'm traveling quite a bit with my 2-year-old son as well. So like you said, kind of mastered the art of the remote work week.
Yeah. So did you start out with single family homes, or did you start out a whole different direction?
I did. Actually, it's funny. I was talking about this last night with a friend. My first home I still own. It's 1540 West 6th Drive in Mesa, Arizona. Little 1,400 square foot, if that, house. It was a 3-bedroom, and I rented it out by the room. And I actually closed on that when I was living in Nice, France. So I did my very, very, very first transaction. I closed on that. Had to take a little train over to Marseille, go to the consulate, sign all the docs. And then I leased that property up remotely as well. So kind of from the beginning, necessity, my desire to be in France and my ability to afford the Arizona market sort of drove me to figure out systems that allowed me to do everything at a distance.
So were you going to school in France, or were you just traveling, or?
I figured out that I could get my language credits, which language was never my strong suit. I think I took French 1 3 times before I finally passed with a reasonable grade. So I figured immersion was the only thing that was going to work for me. And I'm proud to say I can, moderately speak French these days, so that's good. But so I would do my language credits over there in the summers, and I would take an intensive, for 4 or 5 weeks, and then I would spend a couple weeks just hanging out on the beaches.
My daughter did the same thing, and it was Spanish in Spain. So yeah, I think it's a real gift if you can do that. Because there's no better way. You can learn. She had all those years of language, but actually being really conversational was a whole different ball game. So I just think that's really really exciting. So that was your first property. Then where did you go next after that? What happened next?
Yep. I continued in single family for a while. I would say probably too long. But by self-managing and by renting out individual rooms, I was getting such a premium, and I couldn't find a property manager who would put up with all that headache. So it was really hard to make the leap from self-managing and doing everything to delegating and growing. So I probably spent 7 years really doing just that. And then in 2006, I graduated and I moved to Europe. I was very concerned that the U.S. market was overinflated and started investing overseas. And then came back and started again in the U.S. doing fix and flips in 2009 timeframe. So it was just a different market in 2009, and so that was the first time I started, buying and flipping because you could buy things so darn cheap.
Yeah, everything was on sale. So
Yep.
then you obviously transitioned into multifamilies. Was that what was next?
Yep. So I remember, God bless them, auction.com, and now 10X. I mean, they're a great company, but they really changed the landscape. I was going to auction and picking up properties, and life was good. And then they showed up, and then they courted Blackstone and Starwood, and these big funds came into Phoenix and started buying everything at negative cash flows. I mean, they would buy and put a tenant in and lose money every month, and I couldn't compete with that.
It's crazy.
So that really pushed me to look for another alternative. So once again, I kind of left my what I would consider home state, which is Arizona. I say home state from a business perspective. I didn't grow up there, but that's where I spread my wings as an investor, and started to look other places and got involved in Chicago and Washington State, and then that eventually drove me to Puerto Rico. And when I got to Puerto Rico, that's the first time I did a multifamily, a real multifamily. I'd done like a 4-unit in Chicago, but we did our first real multifamily deal down in Puerto Rico.
So those markets, a lot of those markets were high dollar markets like Phoenix, Chicago. So you went into those markets. That's curious.
Yeah. I guess everything's relative. I grew up in California, so Phoenix was a really inexpensive market. I couldn't get into California.
Okay.
And Chicago, I wasn't in the city. I was in like South Chicago. We're now focusing a lot in the Midwest, and there's other markets that are much more steady Eddie and lower dollar. But those markets seemed cheap to me.
Yeah, I can see it is all relative, isn't it? Okay, yeah, that makes sense because I know investors in California, they talk much bigger numbers than a lot of the other parts of the country. So how the heck did you get in Puerto Rico?
Yeah, so my girlfriend Jill, who's the CEO of iPlan Group, iPlan's an IRA custodian. She is one of the smartest, most innovative people I know, and so she's always calling me with ideas. And I was down in Florida, and she called me and said, "Hey, you got to come to Puerto Rico. I'll explain when you get here." I said, "Okay." Hung up the phone, booked a ticket, went down to Puerto Rico the next day, and she picked me up at the airport. And I'm like, "Okay, what am I doing here?" And she and her friend Sharif, who lives down there, drove myself and Matthew and I at the time around, and we looked at everything, and they explained what was going on with the tax structure down in Puerto Rico, and really for me the taxes were obviously a nice driver, but I was looking for a market that wasn't so inflated. Chicago had even gotten pretty inflated, and Phoenix had gotten inflated again, and Puerto Rico was about 6 to 8 years behind the US in terms of the bulk of their crash didn't really start till 2010, and they're just now really starting to claw out of it.
Wow.
And so there was an opportunity to just copy and paste the strategies I used in Arizona down in Puerto Rico.
So you mentioned taxes. So there's a big tax difference, as I understand, in Puerto Rico when it comes to passive income.
Yeah. So all of the U.S. territories, in my understanding, are statutorily tax exempt. So if you're a resident of Puerto Rico, Guam, Virgin Islands, you pay no federal income tax. You still have to file, and there's some, you have to talk with an accountant because there are, like if you own real estate in the States, there's still payments I have to make. I still pay federal returns. But on certain kinds of income, that's exempt. Anything I earn in Puerto Rico, basically. And then Puerto Rico, as an incentive to bring investor capital down to help come out of this crash, also said, hey, if you're an investor and you're, building a business and bringing capital down here, then for the next, 2 decades, you don't have to pay Puerto Rico income tax.
Wow.
So, so that can be pretty substantial. And it's certainly, and it's been exciting to see it in practice. There's a whole community of us that live down there. And it's just so fun because there's this energy and this buzz of entrepreneurialism. It's attracted much, much bigger fish than me. I'm kind of, one of the little guys down there. So, it's a hotbed of like learning and knowledge and networking and information and opportunity. And it's really, really neat. If people have the flexibility to make that happen, I can't encourage it enough.
Well, and then one thing I wanted to ask you about is whenever I've been in like beachy locations, and that's pretty much anywhere, it's kind of laid back, and we would try to get work done on a condo or something, and my time frame is like, can you come like tomorrow or the next day? And they're going, yeah, I can be there in 2 or 3 weeks. How is it the same way down there? Is there a difference in the workers?
Oh, no, it's the same way. I mean, I would say for the Caribbean, Puerto Rico is probably one of the more business-like islands, but you still have to throw in the island Caribbean factor. So our condo project down there has taken 3 years to stabilize. It's 30 units. Meanwhile, we're completing 315 units in Bridges of Pine Creek in Ohio over about a quarter of that time frame. So you have to be prepared for that, for sure. But there's also, as there are more Americans moving down, there's also a lot more workers moving down. A lot of us bring down our own, our own teams and our own crew, and mitigate that solution. So you either price it in and it's going to take a while. And there are some factors, no matter how fast your crew is, dealing with the government, dealing with the municipality, dealing with hurricanes. I mean, things shut down for a couple of weeks to a month, so there are definitely some challenges. But I also have some of the most amazing employees I've ever had, and they're dedicated and they work so hard. But you have to find them. You have to kind of, like anything, you have to go through the process. I would say it's a little bit longer process down there to find those people. So
what about now, of course, so was that the 30-unit apartment building, is that a one you're fixing up as well and to buy, to hold, are you going to flip it?
Pretty much everything we do buy and hold. There was that little fix and flip period when you couldn't not flip in 2010 and 11, when you could buy a triplex for 11 grand and sell it for 100, like you do that.
Right.
But our mentality is buy and hold. The effort to find a good deal, to stabilize it, to get through all of the, I don't want to say things the seller didn't disclose, but all the unexpected problems after you take over ownership. Once you really have something operating, it's not my bias to sell it unless there's just a killer price. So like those units down there, we bought the banknote from Banco Popular. We're finishing it up. And then we'll rent them out as vacation rentals. Vacation rentals.
Okay. So you have to factor in then such a much longer holding period. Your holding costs must be a big dollar item on those, something like that.
Well, the beauty of it is it's not really that much. We own the property, so we don't have any debt we're paying on. We don't have property taxes because of the exemption. If the units are being renovated, there's not, a lot of electricity, water costs, any of that. So, the burn on them isn't that bad down there. That's one of the trade-offs, is that the cost while you're sitting on something isn't so bad. So we've done pretty well from that perspective. I mean, we're probably, on 30 units, yeah, we have insurance. I mean, you got to have hurricane insurance. So we're probably at $2,000 or $3,000 a month on 30 units.
Wow.
Not too bad.
That's pretty cheap. So, what about building materials? Now, I can remember, traveling, and that was an issue. Like years ago when I was in Hawaii and cereal was $1.50 a box, here it was $4 there because everything, unless it was pineapples, was shipped over there. So, like in Puerto Rico, do they have any places where they manufacture their building material? They have that, so not everything has to be shipped in.
Exactly. So one of the things I really love about working down there is that like you mentioned, Hawaii, people think about, I want higher returns, I'm going to go international. So there's a lot of people doing projects in Belize and Costa Rica. Puerto Rico, as a U.S. territory, has a title process that we're familiar with, and we can buy title insurance. They have Home Depot 20 minutes away from our project site. So I can use my Home Depot Pro account and they'll deliver materials. And then in addition to that, we always check locally because there are still a lot of old school craftsmen, definitely with, cabinetry work and, even, plumbing, electrical, all that kind of stuff. You've got locals that can do work down there. So a lot of our stuff is, custom doors, custom windows, custom kitchen cabinets, for a fraction of the cost of what they would have been at Home Depot.
Wow. That's really interesting. So by being there and you've learned all about these different avenues for doing your rehab type of stuff, that's very interesting. So if I wanted to come down there and vacation in a condo, and what is the typical rental on those? I know there's some investor that's going to say, maybe I want to go down there. So what would a 2-bedroom condo rent for in Puerto Rico?
Yeah, so on our side of the island, we're in Cabo Rojo. Cabo Rojo is kind of like the Hamptons to New York. So this is Cabo Rojo to San Juan. It's sort of the weekend or summer destination for the wealthy families that live in the city. And there's a lot of American tourists that come down too. So it's a real hot destination. Our rentals, we don't have any 2-bedrooms. Everything we have is a 3-bedroom, either 2 or 3 bath. The penthouses are going to go around $200 a night to $250. The regular units will be, $185 to $225. And that's pretty competitive for the area. I think you'll pay something about that, maybe a little more at some of the other places.
So 200-ish, which is still very reasonable for, are they beach locations or?
So we are set we're backed up to a wildlife reserve. And so it's very quiet, set back from the beach. Cabo Rojo is a little bit of a party town. So we elected for a property that was just a couple miles away. And then there's 5 beaches, kind of depending, it's sort of on a peninsula. So whichever direction you go, there's a number of beaches available all within that area.
Well, that just sounds like I want to come right down.
Yeah, we'd love to have you.
So tell me a little bit about your company. I know that you all have built a big business, so let's talk about that.
Yeah. Big business. It's funny. It's also relative. I want to make it so much bigger, so it doesn't feel big yet. But I do sometimes. I look at where I was and I go, okay, take a second, be proud of this. So we have a phenomenal team. My COO came from a large engineering firm. He built billion-dollar bridges all over the world, really. I mean, he was flown all over the world to build. Absolute brilliant man. My chief investment officer came from a billion-dollar REIT. I mean, so we've been able to attract real professional talent, and I think that's because we're crystal clear on our mission. So we're attracting a lot of really quality institutional talent that isn't institutional in their thinking. We call ourselves corporate refugees. I don't know if I technically qualify. I never really lasted in a corporate job for any period of time. But we strive to bring that same caliber of, when you think of a high quality institutional firm and you think of the quality of research and whatnot, we strive to bring that, but we also bring an element of accountability that can only come when you are a co-investor. So one of our core values is co-investment, and almost everyone in our firm, from our top executives down through our administrative support at whatever level, they can participate in our deals. Because one of the things I observed that we're looking to fix in our model from the traditional advisory space is a complete misalignment of interests. If if you go to Harvard or Yale or Columbia, and then you decide you want to get in the money management business, and you get hired by Bear Stearns or Merrill Lynch or whatnot, and you're 20 something to 40 something years old, and you're managing and making investment decisions on billions of dollars, and you've been trained, quote unquote, to do that, but all you're thinking about is your very myopic aspect of your training. What our focus at Direct Source Wealth is about bringing experiential and co-investor thinkers to that platform, so that when we look at a deal, we're looking at it as an owner, not as a manager.
Right. That's a whole different thought process, isn't it?
Whole different. Yeah. And I see it. I mean, we're finally getting blessed to really get a seat at the table with these huge deals. And we're doing like $100 million deals.
Wow.
And we're working with institutional partners, and God bless them. I respect what they do. They have a very important role. It's just a different piece of the pie. And a lot of times I see how the questions they're asking are informed by the fact that, number one, as an institutional manager, your primary concern is, I don't want to lose investors' money.
Right.
Your secondary concern is, am I making enough to be reasonable? And the third concern is, can I place this billion or $1 trillion so I can make fees? Because if I can't place all this money, I'm not making any money.
Right.
That's, and this is not a criticism of the people making these decisions. I would make the same decisions in the same position. It's the structure that I look at, and I think maybe that's not the most optimal. For us, we'll manage less money, so we don't have to place as much. So there's not this burden of getting the money out, which can lead to making compromising deals. I'm not saying they're going out and making terrible deals, but your threshold, if you've got to place $1 billion, Buffett used to say it, it was so much easier for him when he had to place a couple $1 million. You can get much better returns. So we really are bringing that ownership mentality to the decision-making process. And that's attracted some incredible talent to our team, which has allowed us to really grow well beyond what I could do on my own, for sure.
Well, now your source of funds, is it private money or bank money, or a combination? Or?
Yeah, we've certainly been approached by a number of larger institutional monies and family offices, and we've really stayed focused on the individual investor. So, we're limited by the SEC to accredited investors. I would love to help, that smart, ambitious 20-year-old who's, saved up 25 grand. I would love to. I see myself in that person, but we can't. So we're typically, our investors have a net worth between $1 million and $5 million, but they're individual investors. So they maybe have 500,000 to $1 million invested with us, sort of at the peak of the relationship. In the beginning, they might start with 50,000 or something like that. But sort of at the peak of the relationship, they might have, 500 to $1 million across a number of our deals.
Boy, that opens up a whole new world for you right there. I mean, to not be at the mercy of a bank it's huge.
Yeah. Now we still work with the banks on the debt side. So, when we bought Paradise Vista down in Phoenix, we work with Freddie Mac. Freddie Mac's not technically a bank, but they're a banking financing institution. So we do borrow capital and do debt. And to be honest, that informs some of the deals we look at. But we also, if we really love a deal, we'll just do the whole deal cash and just raise the investor capital. And we have the flexibility to do that.
So where do you find most of your deals at this stage of the game?
Almost everything we've done in the last 3 years has been a relationship. It's been at an event with some friends. Hey, I'm thinking about selling this, or I've got this note I'm thinking about selling. Okay, great. Yeah, we'd be interested in buying it. The Puerto Rico stuff, we kind of had to break in and create some new relationships with the banks down there to buy the REO assets. But those we're starting to have relationship traction down there as well. And then, we've grown our investor pipeline and our deal pipeline through strategic partnerships. So we have 3 operating partners that are our core partners right now, and we're continuing to add. And so that's created, we have more deals than money right now. We probably have over $1 billion of deals in the pipeline. I don't think we could close them all by the end of the year.
You are in such an enviable position, and most people that are at the beginning of the multifamily journey, they probably cannot even wrap their brain around what you're doing. But I think what people need to understand is you started where everybody else starts, with that very first deal. And if it's possible for you, and not everybody wants the scale of business you've got, but somewhere in the middle, that's the beauty of what I love about real estate. You can say, this is how I want to do it, and this is, I want a lifestyle. I don't want to do this over here, and you can totally create that reality for yourself.
Yep. Well, and to your point, I'm a big believer in people maximizing their highest and best, getting really clear on what their goals are, and then building our platform to assist people in achieving it. So part of this new model we rolled out this year with operating partners is exactly for that. If there's somebody who wants to get into multifamily real estate, and they know they love the talking to investors, raising capital piece of it, but they really aren't either strong or interested in managing the deals, there's a place for them with us. On the other hand, if they love, bird dogging, finding deals, negotiating, but have trouble getting the capital, there's a place for them with us. And if they like both and they just want that extra support to know that, hey, maybe I raised 500, but I don't have in my network the ability to raise the full $1 million. We could fill in the gap. So we love the ability to sort of seed newer people. A number of investors did that for me and helped me get started. And, so we've set our program up to be able to bring in smaller investors. It's still their business. They get to decide, which pieces they want to do, how they like to do it. But they can leverage our brand. Because that was one of the things when I first was breaking in, it was hard to get sellers to take me seriously. I put offers and they're like, who are you? And so I finally had to kind of come under someone else's brand and say, like, I'm with so-and-so. And then I started being able to get deals. And then after you do a couple deals, now you can go to sellers under your own name and say who you are.
Right.
But so that's a big focus for us going forward as we grow, is helping other people grow.
That's very interesting. So what would you say, you mentioned 50,000 before, what would be if someone out there were listening and they said, oh, this sounds like something I would want to do, what's the kind of the ballpark minimum they would need to come in with?
Yeah, typically 50,000 is our minimum investment. We're running a new investor program this week, actually, for 25,000. But typically, that even at 25, someone has to be prepared to, get to maybe 100 within the next few months. But maybe they want to just start at a lower number. It's more comfortable for them. Our average first investment, though, is about 100 to 150.
Okay. Well, it gives people an opportunity that maybe they, like you said, they don't have all the pieces. They don't have the right knowledge to manage that kind of a deal, but maybe they've got access to cash and they want to learn the process, and they can contribute something in the mix there. So it's a great opportunity for everybody and gives you access to money. So it seems like it's a win-win for everybody. Yeah,
it seems to be pretty great. And one of the things I'm really committed to making quote unquote alternative assets a viable option for individual investors. And the reason we are so bent on growing isn't just because I want to be a behemoth of a company. It's that, you can really only make a dent against a Merrill Lynch or a UBS or an Edward Jones or a Bear Stearns or a Wells Fargo, or if you can get to a certain size and really say, hey, we represent a big portion of the market here who's saying, the way business is being done isn't working for us anymore. And so, that's really our commitment, is to get big enough to have a legitimate seat at the table with those guys and say, look, you really got to start thinking about how you're doing things, and maybe do them slightly differently.
Mm-hmm. So when you look at an apartment, multifamily property, I would assume you're looking for value adds. What level of disarray of work are you willing to take on? Do you have a point where you say
far
it's too much?
No, I have a friend who he's funny. He always says, Kira takes on the deals I don't have the balls to take on, and he takes on the hard deals.
Yeah.
We're moving more away from doing some of that. Some of that I did as a necessity as I was breaking into the space, and you kind of have to take on what no one else will do. But some of it is just that I really love the challenge and I love the accomplishment. So our deal, Bridges of Pine Creek in Dayton, Ohio, that project was owned by 3 or 4 other investors who thought they would reposition it. And never did. Either lost it to the bank or just ran out of steam or whatever. And we are. And that's kind of a nice feeling. Like, we got it done when no one else really could. It had been tried so many times that we tried to get an audience with the mayor and meet with the city when we first took over, and they were like, yeah, we'll see, and we couldn't understand. We're like, don't they want, this to be better? And the answer was, yeah, of course they did, but they've heard so many people say they were going to do it that, and then once we started gaining some real traction, then they really showed up and supported us.
Yeah, that's awesome. So I would assume you found the deal, even though if you're in Puerto Rico and you find a deal in Ohio, it's still through your contacts and through your brand and
yes.
where you are in this space.
Yep.
So that makes sense. Most of the bigger multifamily investors, I personally know, they invest where it makes sense. I have one friend that invests where he wants to vacation, where his family is, or where it makes sense.
Right.
So, but the rules are different. You can't stay in your own backyard in most cases and grow, certainly not to the level you've grown.
Yeah, a lot of the mentality of I want to be in my own backyard. I want to say I understand, but I don't. And I don't mean that like in an insulting or glib way. I just literally don't get it because I started my first deal remotely. So to me, what people perceive as an increased risk or fear, I don't see the downside. All I see is the upside of being able to be in a market that's better than the market you live in. And to me, I would never want to live in the markets in the U.S. that have the most opportunity. Because what gives them opportunity is the fact that they're underdeveloped and, don't have all the luxuries and resources and things that I want in my residence.
Yeah. So now when you were doing single family homes, how did you manage those rehabs remotely and still make money?
Yeah. So on my fix and flips, I wasn't that remote. I was living in Sedona and I was working in Phoenix. So it was about 2 hours away.
Okay.
But even then I go really, really slow in only one area of my life. And that is finding and building a relationship with talent. I will not rush in. I will not assume somebody's self-narrative. I do a lot of checking, a lot of verifying. And so once I pick a horse, whether that's a contractor or a realtor or somebody else on the team, I don't make money by managing the crap out of them. I let them do their thing really, really well so that they feel self-expressed and joy and passion and want and enjoy working with me and want to bring me good deals. And so that doesn't require being close by, other than for that period of meeting someone, getting to know them and vetting them. And so that investment can be, I could fly out to Dayton, Ohio 1 week a month for a few months and build those relationships. And within a few months, I've got a team on the ground I can trust.
I know several people now who are more back at the beginning stages that are having such an awful time building a team. They think they've got a keeper, and then the keeper just vanishes or they change their mind. It is such a painful process building a team that you finally say, okay, I've got it now.
So one of the things there that I learned, if I can short cycle that process for someone, is that if always put yourself in the other person's shoes. If you are a top quality contractor, are you going to go do 1 or 2 fix and flips for some newbie investor who has 2 deals and doesn't know when they're going to do the next? Or are you going to go and sign up with a Blackstone or a Direct Source Wealth, and not that we're on par with Blackstone, but a company that has size and bite and can bring a deal after deal after deal after deal after deal, so you're always working, so your family's taken care of. So if they're going to really try to build a team, they have to think big enough to really support the top quality people. And generally speaking, an individual home here or there, it doesn't have enough meat on the bone to attract the right talent. So it's an uphill battle, and it's one that I don't suspect anyone's going to win, no matter how hard they try to find a good team. They have to just think bigger. And I would say start with the team. Go find the best contractor in your area and ask him or her what deals they want to do. And ask them what real estate agent they think you should be talking to. And then ask them what banker you should be talking to. And like, one of the mistakes I think, investors, developers, whatever we want to call ourselves, make is that we start with us. We think it's all about us. If you start with your team and figure out what deals you need to facilitate to support your team and keep them working and keep them happy, you'll do bigger deals, you'll do better deals, and you'll make more money. Yeah.
Sometimes you really have to stretch out. I was having this conversation last night with someone in a group that I'm in. And I said, you've got to figure out a way to get the better talent, because the lesser talent, they're not working out for you. Now, there's different ways you can go about that, but I think everybody is in that spot. I know someone that is growing a really big business. It's like a runaway train. She has so much business. She's in container homes. And I mean, it's enormous. They can't begin to put out the stuff they're doing. No marketing, no anything, but it's so popular that she said she's hired 7 employees, but she, still working really long days, but she's all about the culture and the right fit too. So I think it's kind of like she's kind of like in hell till she can get to that place. And I'm not sure if you're ever in that place when you're in a position of rapid growth.
I think that's fair. Yeah. If you're in rapid growth, you're just drinking from the fire hose, and you got to muddle through that and, just know where you're going. And
until you stabilize.
Yeah. I mean, we have made those strategic trade-offs where we said, we're growing really fast. Do we want to slow down so that we're not, to your point about lifestyle, am I willing to live with this kind of stress? Or if it takes me 2 years to get to the same point I can get to in 18 months, but I can do it with some ease and grace, is that worth it? And, we've made that trade-off call for sure.
Yeah. Well, this has been really great information. I do want to ask you, what are some of the common mistakes you see investors make that, from your experience, that you could maybe keep them from making those? We talked about some things, really good tips with team members. What are some other things that you've seen from your experience?
Yeah. Well, I'll just speak from my mistakes. When I desired to first go passive, I was really intrigued with some of these turnkey companies. And I think the only deal I have that I still hold that's underwater, and I don't know how I'm going to get rid of it, is a turnkey deal that I bought. I didn't do the things I knew how to do. I didn't double check all their numbers. I didn't, I just let them do a turnkey deal. So if you are going to go somewhat passive or turnkey, I think there's good turnkey companies out there. This is not an overall turnkey complaint, but just make sure you're always, trust but verify. Always go with your own, trust your gut, even if you're a new investor. That's another mistake I made was, a seller who's a really experienced investor telling me, your numbers are wrong. You can do it this way. And, don't worry, after I sell you this property, I'll be there to help you. Sure
not.
Sure they will. Yep. All the phone calls don't get returned, So, trust your gut. Even if, the seller could do it for X amount of dollars, you need to know what you can do it for, and you need to trust yourself. It's not that they're wrong or bad. It's just that you're not them.
Yeah.
So, make sure you know what you can do, only get into what you can do. And then just don't be afraid to think big. And, the learning curve on a fourplex or a 30 unit or 100 unit isn't that different from a learning curve on a single family. And if you're going to learn a product that's going to grow exponentially.
That's great advice. So what's the best way for folks to get in touch with you, Kira?
Absolutely. The best thing is probably to opt in on our website. So we're directsourcewealth.com. So you can go in there and opt in and be kind of see what we're working on, see what our deals are, et cetera. And then our 800 numbers on there as well. It's 844-SOURCE-4, like source for deals, source for investments, source for.
Nice. Well, thanks so much. And I know you are very busy, and this has just been so much fun. I want to really, honestly, thank you for coming on the show. And folks, be sure to go over there and check out our website. I'm sure you're going to find a lot of information there. And I agree with Kira. Think bigger. There's nothing wrong with thinking big, and missing the mark a little bit, you're going to be way ahead from thinking small and hitting that mark. So, yeah, that's for sure, right? Yeah. So I think that's it for today, guys. This is Sharon Vornholt, and I'll be back soon with another episode of Let's Talk Real Estate Investing.